Michael Saul with the Stock Market Trading Watch List for Monday, December 19th, 2011. Okay, so there's 9 days left in 2011. Now, like I said in the S&P video, it's probably less than that because there'll probably be light volume heading into Christmas, and then next week, the last day of the year, last trading day of the year, probably be light volume there as well. So I guess you can officially count it as 9 trading days, but it'll probably be less. Now, the market right here, let's take a look. Let's use the S&P 500, okay, which I always start with that. We're below the moving averages, but the moving averages are grouped together here. So this is really not a trend, okay? This is more of a consolidation. Yes, overall, the S&P 500 is down a few percentage points, all right? I'm still looking for an end-of-year bounce. Now, I don't think, tough word, right? I don't think that we get range expansion into the end of the year. Could we? Yes. Could we fall out of bed here and try to retest these lows? That would be the most devious scenario, because what I've been reading this weekend from a couple of sources is that a lot of the fund managers have just given up on the year. They're in bonds. They're taking their small hits. Right, they're down on the year, but they're not crushed. The S&P isn't crushed either. It's down a couple percentage points. So they can be able to spin it as long as we stay around here. Now, if we tank, okay, the fund managers that are on the sideline, I mean, they're going to look great because they're going to miss that big decline. But what happens if we don't tank? And what happens if we fall down, maybe hold this projected trend line? It's only projected trend line because it's only had 2 spots so far. You can draw a line across any 2 data points. Okay, I call them spots, but they're data points. All right, so it's projected that it'll hold here, but we have to see evidence of that. We have to see the test, we have to see the hold, and then of course we have to see the pivot off it and try to get a bounce, and an attempt at a bounce. But what happens if we either go up from here or we pull back and then go up from here? I think there'll be a pile on. I think that you will see the fund managers who are on the sideline now saying, uh-oh, can't miss this end-of-year move. We're never going to hear the end of it, and they may decide to pile on. So I think if there is any strength, either from here or after a pull-in, which I would love to see a pull-in first. I'd love to see a test of this level here, another higher low, like this one is to this one, and then an attempt at a push. Now, what I want to see and what happens are oftentimes at odds, right? I don't always get what I want. I think Mick Jagger says you can't always get what you want, right? But anyway, so that's what I'm looking at here. I'm looking for a push down, people getting a little nervous, and then a bounce, and then I'm looking for some range expansion, okay, as people decide to pile on. I don't think we're going to get the range expansion out of this contraction, but that doesn't mean we can't go down and get some range expansion and stay within here. All right, the 200-day is held like a champ on 3 tests. I mean, it would be a pretty nice move to trade down towards sub 1200 and then get a nice 5% rally into the 1260 area. I mean, that's not nothing to sneeze at either. All right, so yeah, could we tank from here? Yes. Could we range expand from here? Yes. I mean, just because there's 9 days left, this year has definitely thrown some curveballs. I mean, look at this. This happened in 1, 2, 3, 4, 5 days. Okay, this is a pretty sharp move here. All right. Now, I'm not saying we're going to get this kind of move, but if we were to take this trend line and attach it here, right, we'd be at new lows, and if we attached it here, or even here, we'd be at the highs. Okay, now I'm not saying it's going to happen, all right, unless there's some wicked catalyst. I think more than likely we're going to just glide out and stay in this range. But like I said, that doesn't mean that we can't have a tradable bounce here. All right, but I think we're going to stay congested, and then I think next year in January, I think we're going to get range expansion one way or the other. Talk more about that when the time comes, obviously. Now, the other thing to watch for is the January effect, and that's, in a nutshell, when small caps outperform the large caps, and that could also help boost the market, even though the S&P 500 isn't the small cap index. If small caps decide to rally, then money will be put to work across the broad market as well. Maybe there'll be there'll be an over allotment into the small caps, but there'll still be people that are trailing it with the big names. All right. So that's the possible scenarios. I know, it's a couple. I think the least likely are range expansion from here. And by the way, that doesn't mean that we can't break this trend line. All right, that's not range expansion, right? Like I said, this is just a projected trend line. So we could break below it, and as long as we hold above this low, I think that we could still have a end of year bounce. So that's what I'm looking at. All right, NASDAQ 100, same thing. All right, projected trend line there. Russell. Okay, the Russell also. But I mean, now is the time, seasonality-wise, that the small caps start to outperform. Okay, semiconductor's not acting so hot. All right, if you use the trend line from the same low, you could see that we broke below it, but wound up holding it to the end of the week. Last week, let's look at some stocks. Look at CLAC, back down to the 50-day. Showing real good relative strength, though, overall. Definitely one I'd be watching. I was going to put an IBM. I don't know why, because I wanted to put an Intel. And Intel had the warning and everything, so that's what kind of brought it from relative leader to now just, in the middle of the pack, back to this range here. But here's another one. It's been showing some good relative strength, especially since these lows down here in September. So watch this if we do decide to bounce. How about Broadcom? We'll look at Broadcom. Yeah, just definitely a relative laggard here. Looking like crap. Okay, here's the banks. All right, the banks also consolidating here. Now, if they do decide to bounce, all right, watch Northern Trust. Northern Trust is outperforming. It's in a coil, but notice that it's above most of the moving averages here. So Northern Trust would be one I'd be watching for outperformance. Of course, you got the big names like Bank of America. Just looks like crap, but may get a little January effects push here because this thing has been beaten up. Okay, so besides the small caps outperforming the large caps, January effect also has to do with tax selling. So Bank of America may get a little bit of a washout here and then may get a nice little bounce into the start of the new year. Citigroup, okay, also looking woeful. JP Morgan, not so bad. I mean, it's below the moving averages, but once again, they're grouped together. So it's not really a trend there. There's Bank of New York. Yeah. All right, his broker-dealers, they're not looking so hot. Goldman, yeah, down at 90. Is it going to finish above or below 100 for the year? As of right now, it looks like below. All right, so you got the lows here at 84.27. You got these lows here at 87.60. If we break those, look for a quick retest of the lows on the year. Morgan also looking not so hot. Cyclicals. Yeah, the cyclicals are also testing a trend line. Technically, I didn't really get this data point so great here. So okay, there it is. See, it's holding right here below the moving averages, but once again, they're grouped together. They're not trending down or up, right? They're more grouped together. I mean, yeah, there's little slants to them, but not very big ones. XLB, not looking so great there either. Look at some stocks, a Caterpillar, below the moving averages now, but could be setting up, where are you? Be setting up a range here. All right. Okay. How about Alcoa? Yeah, ugly. It's not looking good here. Now, could this be a potential double bottom if it comes down and tests this? Sure. Well, that's a possible scenario to watch. If we do push down in the S&P, which is what I'm looking for, Like I said, doesn't necessarily mean it's going to happen. But if we do push down and some of these stocks test their lows, Goldman and AA, I mean, they could be buying opportunities there. Of course, with proof that the support is holding. And what's proof? Well, proof is you look at an intraday chart, or if you're not an intraday trader, which a lot of you aren't, I've been getting emails that a lot of you traders are more swing or intermediate term traders than day traders. Well, then you look for a daily pattern that sets up, which is fine. And just because you're a swing trader doesn't mean you can't look at an intraday chart at night and say, okay, what did the 60-minute chart do? Where's an area of consolidation or balance that I could potentially set my orders against? Okay, we'll talk about that, in some upcoming videos. Okay, here's GLD. Got a little bounce Friday, but below the 200-day. I would watch that to see if it holds or we get back above it. Here's SLV. So came down here, came a little shy of the target, just down here at 27.41. See if it tests that. USO. Yeah, it was looking okay. I thought it would have a chance, if I could find my words, to get a bounce up, but instead it's now below the moving averages here in this pullback. But nice little hammer. It's not really at the top of the range, but it's good enough to be called a hammer. See if that leads to some sort of bounce here. Or if we're going to go lower, watch this low down here. All right. Let's look at some of the glamour stocks. Apple. Yeah, it was looking okay here. Had this nice little range it broke down from, though. And now we have this little pause. I wouldn't be surprised if it pushed down if the market did see weakness. Watch the 200-day, maybe a potential double bottom down here. Amazon. Okay, Amazon had that wonderful reversal on Wednesday, and then just 2 pause days, Thursday and Friday. Again, if we go down, watch this for a retest. I'd be actually watching this for a high or low. Sometimes these long hammers can, when they're tested, you could form a high or low against them. And then watch this one for a potential bounce back into the moving averages. And you see these moving averages, except for the 200-day, I mean, they're trending down. So these are potential resistance on a test up. Okay, here's Google. Yeah. Doing okay, but could be a head and shoulders pattern, a mini head and shoulders pattern setting up. If we do see weakness early, here's one I wanted to point out, Teva. Teva has the 200-day above, but had this little spinning candle here. All right. So could be due for a pullback back to these moving averages. So watch this one. And if not, you got the 200-day as potential resistance above. Okay, Research in Motion. It was an okay fade. All right. You can see here I talked about potentially fading this. Here's the 5-minute chart of Research in Motion. Just got to be careful. This is on a couple people's lists for potential January effects, including mine. I'm watching this one too for potential January effects kind of move. So it may get some little short-term volatility. A lot of people are looking at it to potentially get a little bounce here. But here was the first 5-minute candle, and you could see here, unless you were really agile and bought it towards the open, you didn't get much off the first 5-minute breach or off this little consolidation here. It didn't really go very far. So this one may want another day of consolidation or maybe even a little more downside. All right. How about Visa? Okay, Visa started out of this little pattern that we were watching last week. Didn't get very far. This is definitely showing fantastic relative strength. So if we did bounce from here, if we did rally from here instead of going down first, this is one I would definitely be keying on. Of course, barring news, you always have to be careful with news. MasterCard, definitely lagging relative strength-wise to Visa, but overall, not looking bad. Looks like a bull flag to me. once again, I wouldn't be trading this if the market wasn't bouncing. I wouldn't be sitting here going, well, MasterCard's in a bull flag, so I don't care that we're tanking. No, obviously not. But one you want to put on your list that, if we do get a bounce, either after initial downside or if we just get a bounce from here, definitely one to focus on. Okay, IBM. Yeah, didn't like the candle on Friday, but watch that 89 EMA. Or if we do get weakness early, can extend down here to the 177 area. So basically, if my theory and I guess hope, and that's a terrible word to use in trading, but if my theory that we go down first based on the chart pattern here, based on the fact that we just couldn't get it much upside, if we go down first and we do hold this trend line, okay, or the projected trend line, like I said, it's not a true trend line yet, I'd be watching for the stocks that were outperforming. And then if we did get a turn and we did get a bounce, those are the stocks I would be keying in on. All right? Anyway, running a little long today. I apologize. Have a great trading day on Monday. Great trading week. I'll talk to everybody again on Tuesday. Let's see if my weakness early on scenario comes to fruition. Take care.